Hey there, savvy traders and curious investors. Welcome back to the channel where we demystify the complex world of hard-to-borrow stocks and potential short squeezes. Today, we're diving deep into a fascinating situation involving CIIT International Inc., ticker symbol CIIT. This stock has hit our hard-to-borrow screener with some truly eye-watering numbers, and we're going to break down exactly what that could mean. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show company logo/info card. Let's start with a quick profile of CIIT International Inc. This company operates in the industrial sector, specifically within integrated freight and logistics. Through its subsidiary Rushing International Company Limited, CIIT provides logistics services across a broad international footprint, including Hong Kong, Vietnam, Japan, Zimbabwe, and South Korea, focusing on ocean freight forwarding and container shipping. With a current market cap of just $3.05 million, CIIT is firmly in microcap territory. Looking at recent price action, CIIT has seen a significant move up over 4.6% today, a modest 1.41% in the last 5 days, but an astounding 553.92% over the last 30 days. That's a massive run-up. What's cost to borrow and why it matters? So, what does it mean when a stock like CIIT is hard to borrow? It boils down to something called the cost to borrow, or CTB fee. When short sellers want to bet against a company, they borrow shares and sell them, hoping to buy them back later at a lower price. But borrowing isn't free. There's a fee, an interest rate, paid to the lender of those shares. This CTB fee is annualized, and it's a direct indicator of demand from short sellers and the supply of shares available to lend. The higher the fee, the more difficult or expensive it is to short the stock. Fees can easily exceed 100% annually, meaning it costs more than the entire value of the stock just to hold a short position for a year. Why this stock is hard to borrow right now? Show CTB data on screen. Now let's talk about CIIT specifically. Our screener shows the annualized cost to borrow fee for CIIT International at an incredible 858.6%. Let that sink in. This is an extremely high fee, signaling significant demand from short sellers or a severe scarcity of shares available to borrow. With an estimated float of 7.3 million shares, and the current availability of shares to borrow listed as unknown, it implies that there are very few, if any, shares readily available for new short positions. Our internal composite squeeze score, which combines factors like CTB, borrow supply, and price momentum, currently stands at a notable 52.7 for CIIT. It's crucial to remember that a sky-high cost to borrow doesn't automatically guarantee a short squeeze. It can also reflect a very strong conviction among short sellers who are willing to pay a premium to maintain their positions. Squeeze mechanics explained. So, if a squeeze were to materialize, how would it work? A short squeeze occurs when a stock's price starts to rise, forcing short sellers, who are now facing escalating losses and crippling borrow fees, to buy back shares to cover their positions. Show a graphic of squeeze mechanics as buying action further pushes the price up, creating a feedback loop that can accelerate very quickly. When borrowable shares are scarce, like they appear to be for CIIT with its 858.6% CTB, any buying pressure can have an amplified effect because short sellers have limited options to cover without driving the price higher. It's worth noting that today's volume for CIIT was only 51,232 shares, significantly below its 30-day average of 8,224,727 shares, resulting in a 0x relative volume. This means that on a day with significantly lower activity than average, any sudden influx of buying could potentially move the price more dramatically. Dilution risk check. One critical factor to consider for any potential squeeze candidate is dilution risk. Dilution happens when a company issues new shares, which increases the total share count and can offset or even negate the upward pressure of a short squeeze. Highlight dilution info. More shares mean the short sellers have a larger pool of stock to cover their positions from, and the buying pressure is spread across a wider base. For CIIT, our checks found no recent dilutive SEC filings such as -1, -3s, or 424BS in the last 90 days. This absence of recent dilutive events means that, at present, CIIT doesn't face this particular headwind to a squeeze thesis. Recent reverse split watch. Another important piece of the puzzle for CIIT is its recent reverse stock split. CIIT International executed a 1-4-10 reverse split on July 20, 2026, which was just 11 days ago. Explain reverse split visually. A reverse split reduces the total number of outstanding shares and proportionately increases the share price. For example, if you had 10 shares at $1 each, after a 1-4-10 reverse split, you'd have 1 share at $10. This effectively reduces the estimated float. Historically, many microcap stocks that undergo reverse splits tend to see renewed volatility or a price pop within about a month after the split. While this is a pattern we've observed, particularly as the reduced float can become more restrictive, it's absolutely not a guarantee for every stock, including CIIT. Again, a quick reminder, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you keep an eye on with CIIT? First, continue to monitor the astronomical 858.6% cost to borrow fee. If it stays high or climbs higher, it signals increasing pressure on short sellers. Second, watch for any shifts in borrow availability. If the unknown changes to very few or zero shares available, that's a key indicator. Third, look for a significant increase in buying volume, especially relative to the current low daily volume that could start to push the price. And finally, keep the post-reverse split window in mind. The coming weeks could bring further volatility following the historical tendencies we've discussed. CIIT International Inc. CIIT is certainly an interesting name on our hard-to-borrow list with its incredibly high CTB small float and recent reverse split. While the setup presents intriguing possibilities for those watching for a short squeeze, always remember that these are high-risk, high-reward situations and nothing is guaranteed. Do your homework, understand the risks, and make informed decisions. If you found this breakdown helpful, please smash that like button, subscribe for more deep dives into hard-to-borrow stocks, and let us know in the comments what other tickers you'd like us to analyze. Thanks for watching, and we'll see you in the next video.